Apple's days of explosive growth are over. With 75% of its value tied to iPhones, looks like the tech giant's future is at risk as the smartphone market runs out of steam. So that's what NYU Stern professor Ashwath Damodaran, hopefully I pronounced the name right, said about the smartphone market. He's saying it's in big trouble, and Apple is my biggest position, guys. So in this video, I'm going to cover Apple's options, my large position, which makes up 55% of my portfolio, because I'm rethinking my entire position on Apple. I'm rethinking it. So I want to not waste your time. Let's watch a clip real quick. I'm sick. That's why my voice sounds different. Sorry about that. Let's watch a clip about Apple. And after the clip, I'm going to show you my portfolio and how I'm trading options.
Let's start with Apple. The obvious, many people said, okay, once they went through this rebirth, once you get iPhones in everyone's hand, what's the metric goes here? 1 billion install base. The stock is a buy, massive buybacks. What can go wrong? Talk a little bit about what you think is going on here.
Apple's been a middle-aged company now for a decade. I mean, this isn't new. It's, I think once we got people out of flip phones into smartphones, it became a question of, really hitting, middle single-digit growth. I mean, you get these spurts around new updates, but it's been a middle-aged company. I think the problem, though, is the smartphone business seems to be running out of juice. I'm stuck on the iPhone 12. I don't even have the slightest desire to even look at the iPhone 16 because not enough is different about each version of this. And Apple gets about 75% of its value from the iPhone now. It's become heavily invested in the iPhone and the subsequent updates, which means you're going to live through these update to update, corrections around the price. So it doesn't surprise me that people are a little disappointed, but looking long term, my bigger concern is what if the smartphone business itself starts to go into decline?
I mean, we can argue that it already has. The bulls would say it's all about services, it's all about subscriptions, and it's all about stock buybacks. But not to put too fine a point on it, what do you think the stock is worth here?
No, I don't think the stock is massively overvalued in any way, but I do think that all of those things are good, but you're trying to fill in a really big space. I mean, you can add the services business, but the amount of money that Apple makes on its iPhones is so immense that making up for it is not going to be easy, even with 3 new businesses. So the services business and the ecosystem that they have has to be dramatically large for it to make up for the iPhone. And that's always going to be a concern when you invest in Apple. As for the buybacks, that's really not an alternative. It just is a return of cash. And Apple has been very good about returning cash for much of the last decade. I think collectively, Apple has returned more than $600 billion in cash over the last decade, which makes it the greatest cash machine in history. So I like the company as a cash machine, but not as a growth engine.
Yeah, and I think even at 188, you were saying, look, it's at 215 now. We're in the neighborhood of fairly valued, not dramatically over, but also not dramatically under. And a lot of people are probably just going to. I thought it was interesting that Berkshire sold half of their position. You'd think this is the kind of just sit on it forever. I think that was their intention. Does that sale tell you there's anything else at the margin that could really go wrong?
I wish I would read a signal about Berkshire Hathaway thinking Apple was overvalued. I think the reality was Berkshire was about 30% of its portfolio was Apple.
Wow.
I think it was just a concentration issue, which is when you have a third of your portfolio trapped in one company, it's a very dangerous place for anybody to be. So I think the pruning really reflected that overconcentration.
I hear you, but I hear Munger's words echoing in my ears when he says, you don't want to, spread. What was the phrase? You don't want to spread your eggs in different baskets. You want to put them all in one basket and then watch it very carefully. So I would view that concentration as a benefit almost.
And the counter I would have to Charlie is, I remember when he said that at his meeting would have been, would you take 30% of your money now and buy any one stock, no matter how great it is? And I'd wager he'd say no. So It almost seems like we have 2 sets of rules, one for investments we're going to make and one for investments we've already made. I think we need to be consistent.
No, that's very interesting. By the way, he's hardly alone, or they are, in facing that kind of dilemma, which a lot of investors run into. That's interesting you bring that up. So many other names, honestly, I wish I could run through. Intel, Walgreens, Starbucks. Let's just talk Intel because there's more news about more funds they're receiving from the government today. And of course, it's an important issue that we replace, Chinese chips and Navy ships, and maybe Intel can do that. Sorry for the rhyme. But what would you say about this company's valuation and prospects here?
I think Intel is all 3 companies are aging companies, but what makes Intel different is the business it's in is growing. I mean, look at NVIDIA, same business, look at the growth you're seeing. Intel's problem was too much Me Tooism and too big a bet. So both the foundry, Intel Foundry, which was their attempt to be the next TSMC, and the AI chips, they've spent immense amounts trying to be the next NVIDIA. I think they've lost on both counts because TSMC and NVIDIA are way ahead of them in each of those markets.
I'm currently up $231,000, and this is a very big position for me of 55% on my portfolio. I'm holding 7,800 shares at an average cost of $186 per share. Now look, on Apple, I have two different positions. I have the 215 sell put, which is expiring literally immediately, and the 230 covered call, which is also expiring immediately as I'm making this video. Now, I need to do something here, but I will explain to you why I'm not going to make a trade yet today. First, I'm going to let this option expire on 9/20, which is essentially tomorrow. Then I have a 230 covered call, which also is going to expire essentially tomorrow. I'm not worried at all for Apple 215, and I'm looking to get assigned. See, the thing is, and here's the key point that I got from the clip, the greatest cash machine in history is Apple. That's exactly what the Stern professor said, right? He said that it's the greatest cash machine, but it's not the greatest growth engine right now. That's his exact words. He said it's not the greatest growth engine, which is fine with me. Guys, we're looking for safe, passive, consistent income selling option. That's what my brand is about. That's what I've been doing for years now, okay? So with a $100,000 portfolio or more, if you're generating 3% a month, that's fine. That's a strong secondary source of income. Before you know it, you get your portfolio 300K, 500K. You're making 3%. 3% of 300K is $9,000 a month. That is a fantastic income. So I'm looking for consistency. I don't care if Apple is no longer a growth engine. You can make really good money off of the options from just selling them. As you can see here, 215, 230. Apple's almost at 215. I am not worried at all because I would like to buy more Apple, even though I am cautious on Apple to some extent. I agree with the NYU Stern professor, what he said, that it's not a growth engine, but this is still a cash cow. Apple has a lot of strong suits, okay? Look, it is true Berkshire Hathaway reduced their position. That is a troubling sign, but they reduced their position. They didn't close their position. And I can see why you would want to reduce your position. Since Apple did go up a lot, it has become less attractive. However, less attractive doesn't mean bad, okay? If you look at Charlie Munger, okay, this is very interesting because Warren Buffett, originally bought Apple. He bought it due to brand, due to the consistent cash flow. Charlie Munger, he believes in concentration. He says concentration is a benefit. Guys, I've kind of been saying on this channel that I go against the grain. I'm conservative and I look at unique opportunities in the market, in trading, and I go against what a majority of other people say. And that's because I have a degree in this stuff. I actually studied this stuff. So I'm not necessarily looking to be more on the marketing side. I'm looking to actually give you tips that make you money. Because I know if I make you money, I feel good. I feel good. It goes well with my faith. I'm happy, okay? I want to get results. I'm not looking to be pretty. I'm not looking to get cute with it. I'm going to be honest. You don't need to have 50 stocks in your portfolio. You don't need a whole lot of diversification. If you have the top brands, the top stocks, you only need 10 stocks. You can just run covered calls. You can just sell puts. And Charlie Munger said that concentration is a benefit. He said you can have a few eggs in your basket and pay very close attention to that basket. I love that. Apple's brand loyalty is unmatched with over 1 billion active devices, creating a massive stable customer base that consistently drives demand, guys. And for me, Apple, look, I'm gonna show you what I would do right now. I'm gonna go to Trade Apple Options. Here's some things I would do. If you don't have Apple, first of all, I would just sell some put options. I would just go out to January 17, 2025. I would easily just sell and let's see, let's take a look. 200 strike price here, 24 delta. This is pretty good. The return here is 2.5%. This is not a huge return, so maybe I would go for 205. This is just a 3% return. This is not huge, and it is some time. But look, you can do two things. You can basically run what I call, this is actually a legit strategy. It's called the covered strangle, all right, covered strangle. So look, this is how it works. Basically, you could sell some put options looking to get assigned, all right. This will give you a really good entry into Apple. But at the same time, you can also do some covered calls. So let's say you buy Apple right now, you can sell a call and go for a covered call at 220, okay? If you're looking for safety, if you're looking for cushion. All right, this chart isn't super accurate because we're not showing you having shares, so you can't lose money on the upside here. This is not really true right here, and the max loss is not. It is not unlimited because I'm recommending that you have 100 shares of stock, so it'll be a covered call. So anyways, this is not super accurate, but it is interesting that you will collect $1,855 worth of premium, and yeah, you'll have a sell put 205 and then a 220 covered call. So that 220 gives you like $4.30 of upside plus $12 of premium. I mean, this right here, essentially, if you were to get assigned, you have an average cost of 205. This right here, if you buy it at 215.70, but you collect $12. Are you kidding me? $12? That's amazing. It's amazing. You collect $1,200 in income. That means your average cost is 215 minus 12, which is 203. All right, so your average cost would be 203. So basically, guys, I'm showing you how to get Apple for 203, 205, $10 discount, $10 discount. You're telling me you can't make money when you basically have a high quality, great brand, top stock. Sure, it's not a growth engine. Yeah, we're not going to get as rich as we are with trades like Nvidia and Palantir. I mean, I've made so much money on Nvidia and Palantir, but Apple's also. I mean, let's get to the facts. All right, let's take a look at my Apple position. I'm up $230,000. Guys, listen to this also. This is going to be really important. It has to do with taxes. I'm not a tax expert, but look, I have a lot of experience. I've made millions of dollars trading, and taxes are part of that. I pay a good amount of taxes. Too good. All right. Look, $230,000. I can't sell Apple if I wanted to. Isn't that crazy? I can't sell Apple even if I wanted to. Why? Because look, my taxes. All right. Yeah, I'm a business owner. I don't really reside in the U.S. most of the year or at all. I only go there to visit my family and stuff. I have an office in Florida. So my taxes are, let's say, about 35% or so. Pretty high taxes. So if I were to sell and realize $230,000, guys, 35% of 100K is 35K. 200K would be 70K of taxes. So 30K would be like 80K of taxes essentially. I'm going to lose $80,000 in taxes. Makes no sense. Absolutely, like, stupid for me to sell. So even if I didn't like Apple, even if I was bearish on Apple, I can't be 35% bearish. 35%, like, no way. Apple's not going to fall 35%. Maybe we could see a pullback, just like we could see a pullback in all stock market investing. I mean, we see that all the time, right? Stocks go in cycles. We have interest rate cut, and maybe the market has a little bit of panic. Maybe we get a pullback, 5%, but not 35%. So when you have a big gain, it doesn't really make sense to sell. I'm bullish on Apple. I think we have a good solid base at $205 per share, and I think at 205 you're going to get a long-term return above the market. All right, above the market. So we're going to be beating the S&P 500. You know, you can just invest in SPY, and that's the benchmark right there, right? I trade SPY. Tell a lot of my students to do that. But yeah, I would say that for Apple, 205 is very strong. By the way, guys, just want to announce real quick that I'm going to be becoming a one-on-one coach. I'm going to start coaching one-on-one. I'm going to move away from doing boot camps and everything like that. So if you want to be part of my last boot camp that I'll ever offer, you can use the first link in the description. But I'm going to become a one-on-one coach. I'm going to start focusing more hands-on with everyone because I don't want to be a product. I just want to actually focus one-on-one with folks. I want to go above and beyond what any other coach and option coach does. So I'm going to start doing one-on-one trading and coaching. So that's going to be interesting. I'm going to announce that in the near future. Anyways, hope you enjoyed this video, and have a good one.